Guys, welcome to my trade recap of today's price action and the trades that I took today, the opportunities that I missed on, some setups that I could have been taking. So let's just get a quick review of that. So we got April the 16th, and coming into the New York session, what can we see? So we can already see a fair value gap right here on the 15-minute chart. We can see that there were some, just ignore this part right here. I'm just gonna go over the price action before the New York session. So alright. We made some Tokyo highs right here. We had a retracement back. We had a liquidity sweep of this low right here, creating lower lows. Then price is coming back up. We are filling this gap, and what is happening right now is interesting because we are right now inside of an 15-minute gap. We are creating these wicks right here, like a triple top. It is a good sign of rejection. So we want to be looking for some short opportunities to short the market. And at this point I was looking at the charts, and I had a setup to go for a retest. And what I noticed was this 1 hour fair value gap right here. So I actually took a trade on that one on ES, and I was a bit late to the move because, as I said, I had this setup in mind. Go like right here, put the stop loss above this rejection right here, and also above the 15-minute gap that we are respecting right here. So this is a strong protection right here in front of the stop loss. As a target, as I just said, I would just go for the next, like for the closest possible target that we have. And the closest target right here is this big fair value gap right here. We would just target the midpoint of the fair value gap. And just like that, the trade would have been playing out. We're getting a 1 to 3.7 risk to reward. So in this trade, what I did was I was entering further down. That was a bit late, to be honest. I don't know, I just missed that trade. And as I entered it, I just closed it right after the open because I realized that I wasn't trading my rules. I wasn't trading my strategy anymore. So I just closed it. Price still went to my target. But yeah, that's how it is. We just take it as a lesson. So also what I want to tell you is this zone right here, where I would be taking the trade from, is a 8 a.m. opening range that I sometimes trade. As you can see, we can mark out our 8 a.m. candle, a 15-minute candle, as the opening range. And what I usually would do is I would just wait for the 8 a.m. candle to 8:15 to form. Bro, what the wait, give me a second. I would just wait for the 8 a.m. candle to form, mark it out, then I would wait for market open, see where price is at the market open. it's either breaking out to the downside or to the upside. And then I would just trade a retest, enter at the midpoint, and just target something like lows or highs in the direction of the breakout that we had before. As you can see, on Thursday we had a breakout to the downside, like this wick right here. It's not as clean. It's not the cleanest price action. It's not the cleanest thing to trade for this opening range, because usually you would just wait for a clean breakout, with candles in it, and then like a retest. In this particular situation, we had a wick breakout, as you can see on this 15-minute candle. So we got 9:30 market open. And this candle closure right here is beautiful to take an entry. Why? So first of all, you see that this candle right here is forming the third rejection, the third wick rejection of the 15-minute gap that we have right here. And we are also closing below the gap. Also, what we have here, we have a breakout to the downside. We have automatically, let me show you, we have automatically, after we have the breakout, we are getting yeah, that's what we're getting. We're getting a retracement back. We are filling the midpoint right here of the zone. We are closing right here. So this would be the candle. This would be the 15-minute closure from 9:30 to 9:45. And the beautiful, like the best entry would be right at the candle closure right here. So as this candle closes, you're just gonna enter for the trade, place your stop above the fair value gap, and just go for these shorts. So after that, after I missed the trade, I wasn't looking for a reverse. Like, even though I had that in mind, that we might have been, like, that we might reverse this whole thing right here after the retest, because the overall sentiment is bullish. We got 4 consecutive days where we just moved up. So we are in a strong bullish trend, and I would just expect some kind of reversal. After I missed the trade, I don't know, I switched off and I wasn't looking at the charts. It was only after that I realized what I missed out on. So the reversal would be cleaner on the 1 hour chart. And what you can see here is that we are filling, like we are mitigating the 1 hour fair value gap. We are getting a mitigation of the midpoint right here. And we are closing back above with a strong wick. We are closing above the fair value gap. We're getting a 1 hour closure here, which I also often use for entries. If the candle closures are aligning with my setup, I would just take them, as I just said, for the entry for shorts. As I said to you, the 15-minute closure, something that you can trade. Here you can go at the 1 hour chart and you just wait for this candle to close. And what you can do now is, what do you know now? You know the fair value gap is mitigated, the midpoint is mitigated, we get a closure above, the overall trend is bullish. So what you want to do, you want to look for longs right now. So this would be around 10, what is it? Wait, that would be 9. Yeah, it's 10 a.m. My time is set at the German time zone, so don't get confused. I'm just gonna use New York time zone terms. So yeah, as I just said, we're getting a 1 hour closure, and we're looking for longs. You can just enter on the next candle. This was also a trade I missed out on. And what you wanna do, you wanna put your stop loss just below this wick, like below the wick of the 1 hour candle of the bearish one. Why? Because it is like, as I just said, it is a significant candle closure. 1 hour time frame it's a high time frame. It's a significant point. It's a significant sign that you can take. Right, it is clearly bullish because we're closing outside of a bullish fair value gap. And if price is gonna move lower than this candle wick right here, if the next 1 hour candle is moving below this wick, we are probably gonna get a reversal right here at this point, and we're gonna go for shorts all the way down. But this is not happening, as you see, so we can just put it beautifully below the wick. And what I do here is, so obviously at this point, just imagine these candles are not there because we are just opening this 1 hour candle. So all there is to it, because we are trading all-time highs, the only point and the only target that we can take of high probability would be the Asia highs right here. So this is a beautiful point to target. This is a beautiful level to trade towards, and we would just take it, and we would get a 1 to 2 risk to reward, which is great. You don't have to go for, I don't know, some crazy 1 to 10, 1 to 5 risk to reward, because you obviously don't fucking know where price is gonna go. So if you just want a safe trade, and that's all you need, like literally that's all you need, you can just target the Asia highs right here. But guys, again, this was a trade I missed out on. I gotta be honest here. But it's alright, I'm gonna walk in that. Learning, collecting data, and just improving. I'll see you in the next one. Thank you for listening.